Uh, Felix is waiting to be allowed in.
I'm letting them in.
All
I'm
right.
letting all of them in now. I think everything is ready, right?
All right.
Yes.
Okay, cool.
Yeah.
So we can start.
Good afternoon, everyone, and welcome to this webinar. Let's give it a bit more time, maybe 2 to 3 minutes for more people to join, and then we'll start.
Hello, hello.
Hello, how are you?
I'm okay. How are you?
Good, thank you. Thank you
Yeah.
for joining. We're just waiting for a few more participants, and then we'll start.
Okay, okay, okay.
Yes. All right, we'll wait for others to join us as we've started. Good afternoon once again. We're very happy to receive you here and to have you attend our webinar. This webinar is based on the effect of COVID. We've had a lot of studies that have been on the effect of COVID-19, but this one is specific to savings groups, and we went into great detail to try and understand what the saving groups are going through or have had to experience because of COVID-19. The study was conducted by Uganda Matters University and AMFU, and with support from FSD Uganda. And so we're very happy to be able to share these findings with you and to receive your feedback. I'm just going to share our program so that you're aware of what's going to be happening throughout. You should have received it as well in your invitations, but I'll share it so we're together on the same page. And so we'll begin with remarks from FSD Uganda. And this will be led by our head of the digital economy pillar, Ms. Jackie Kitibwa. We'll also have remarks from AMFU and from the executive director, Ms. Jackie Mbabazi. Then we'll have a deeper presentation from AMFU and Uganda Matters University. These presentations will come from Ms. Susan Cho and from Mr. Peter Lugemwa from Uganda Matters University. Then after that, to just give an overview and context of the information you're receiving from the side of the regulator, that is Uganda Microfinance Regulators Association, as well as from the industry, we will receive input from Mr. Tibbs Kiziriza. We'll also receive feedback from Mr. Michael Katambira and from Mr. Vincent Tumijuke. I'll provide more detailed profiles when we reach that section in the program. Then we'll give you an opportunity to ask questions, but please feel free to add your questions within the chat within the chat box, and we will respond and we will respond as well as give you an opportunity to share. And just as a reminder, in terms of housekeeping, to please keep your microphones off unless you're speaking. And when we do speak, especially for the discussants, to turn on your video. For the other attendees, you may turn on the video if you'd like. We'll not make it compulsory for you, but please remember to switch on and to switch off your microphone after speaking. At this juncture, I would like to welcome Ms. Jackie Kitibwa to give her opening remarks. Thank you.
Thanks, Anthea, and thank you very much, all of you who have been able to log into the webinar. We are very happy to host and facilitate this webinar and excited to see everyone and all the institutions that are represented today. Maybe just to start, for those who might not know what FSDU is about, we are an independent not-for-profit organization that focuses on financial inclusion and inclusive financial market development. We achieve this through providing policy and private sector recommendations that are well evidenced and relevant to the local context. We also provide technical assistance to financial sector regulators, policymakers, and industry associations on fit-for-purpose policymaking and supervision. We also provide catalytic grants that enable us to test innovative solutions in the financial sector in order to grow the real and social sectors, especially for small businesses and small borrowers. Our target focus is the vulnerable groups, or what you would call the underserved segments of the population, in particular women, refugees, youth, and smallholder farmers. So FSD recognizes the very important role that financial sector industry associations play in promoting responsible financial inclusion within their respective environments, including advocacy work, stakeholder engagement, delivery of services to members, supporting financial education and literacy, networking and professional development, and others. And to this end, we have continued to support industry associations to build their institutional capacity to support and promote financial inclusion. Our focus has been on building evidence-based advocacy that can help in better policy and decision-making, and empowering the industry associations to advocate for their member interests with limited dependency on donors or consultants. And some of the work we have done, for example, has been in supporting the FinTech Association to develop and adopt an industry code conduct that aims to enhance its credibility and ultimately increase customer, regulatory, and investor confidence in the industry. We've also worked with Uganda Bankers Association to carry out a comprehensive banking regulatory review, and recommendations have since been shared with the regulator for consideration. Third, we have also worked with associations, 3 associations, on strengthening their research and development capacity, and are currently involved in a research collaboration project with, of which today's webinar is one of the key results of this process. To achieve this, we have paired each industry association with an academic institution to collaborate on a topic of research that they felt would be relevant for their respective sector clients. We see this as a powerful tool that promises the following outcomes. First, a collaboration between associations and academia is a creative and cost-effective approach that ensures that there is sustainable knowledge transfer between practitioners and researchers. Second, we see such partnerships as going a long way to motivate researchers and the academia to take all possible steps to collaborate with practitioners and to apply what has been discovered in research, and could also encourage researchers to get into new and exciting areas of research. Third, we see this approach as a way to reorient the incentives for academicians and help achieve a better balance between conducting research and ensuring that the research, the findings they do from research actually positively change practice and resource allocations. And this would allow academic institutions to increase their relevance in developing solutions that can be used to solve real-world problems. Going back to today's topic, the theme of today's webinar is the effect of COVID on saving groups in Kozi and Loro. We know we have seen the saving groups provide the underserved segments with an opportunity to access an informal saving structure at community level. The last FinScope we had showed that the majority of Ugandans actually save with informal saving groups more than the formal saving groups. Saving groups have been set up to enhance livelihood options, to increase incomes for vulnerable families, to promote savings and investment practices, to enable regular and on-demand access to finance, to encourage a spirit of and a culture of solidarity and mutual empowerment, and to provide individual support to members to build their skills and competencies. It is therefore very important that policymakers, regulators, development partners, the civil society and academia all partner to support this sector by first instituting enabling policy and regulatory environments, providing the relevant infrastructure and technology to support the activities of the saving groups, providing the necessary financial literacy and digital skills, as well as capacity building for the groups themselves. This would help to improve their effectiveness, their impact, and sustainability. So this research aims to help us pick some learnings, as well as challenges that have been faced by the groups since the onset of the pandemic in 2020, as well as know what the effect has been and see what the opportunities have ensued so that we can come up with practical recommendations for actions. We are therefore very excited to share the findings of this report with you and look forward to receiving your insights on the findings. I wish you all the best in the webinar, and I look forward to an engaging discussion. Thank you very much.
Thank you so much, Jackie, for those remarks. I'd just like to welcome the Executive Director of AMFU, Ms. Jackie Mbabazi, to please give her opening remarks.
Thank you, Anthea, and thank you, FSDU and everyone we've worked with on this project. It's been an exciting one. And so I want to begin by, first of all, thanking all the participants that have logged on to this meeting for sparing their time to come and listen to the study, the findings of the study, hoping that this will also help to enlighten them in the work that they do. And so we look forward to also getting your feedback on how we can better address some of the concerns that will come through this study. I want to also add my voice to thanking FSDU again for supporting this project. Research is not an easy thing for associations because it requires a lot of resources and a lot of time, but that is one of the major reasons why associations exist. And we thank you for your support in building our capacity in this area and partnering us with an academic institution whose core mandate is basically research. So I also want to add my voice to thank Mr. Lugemwa and your team from the Uganda Matters University in Nkozi that we partnered with to carry out this study. This study, the first thing that it did is to help us to get first-hand information on what is going on in the groups, especially in the two areas that we carried out the study on, which was Loro and Nkozi. While these are samples, we know that they are representative of what is most probably going on in the other places, in the other areas within this country. And so getting this first-hand information directly from these group members gives us an opportunity to be able to understand what their key challenges are. And when we are designing our lobby and advocacy initiatives, then we design them with confidence of having first-hand information about what we have discovered through the studies that we have done. So I do not want to preempt the findings of this study, since we have these people that are going to discuss this that were actually involved in conducting the study. But all I want to say is that it was also a reflection of what has happened with all the other customers of our members that we work with. The feedback that we got from this study was able to help us concretize what is generally going on when we talk about the general microfinance sector as a whole and the customers that they are serving. Some previous studies have showed us that over 59% of the customers that MFIs and VSL groups are involved in had their businesses permanently closed because of the COVID pandemic, which was very alarming in terms of what interventions we would have to support the sector to do in order for them to be able to boost these businesses and have them come up again. We've gone through several, this year and last year has of course brought issues of how we need to work on the resilience of some of these businesses that we operate, especially among the micro entrepreneurs. And the fact that our members feed into the VSLAs because they provide linkage banking services to them, it's also upon us to know what happens beyond just the MFIs that we work with, and also to get to know what their customers are going through. So that is why this study was really critical for us as an association so that we have empirical evidence on what is exactly happening on the ground to enable us to be able to design interventions that actually suit the needs of these customers and eventually the businesses of our members who are microfinance institutions, since these are their customers. There is one of the programs that we are working on, which awards excelling micro entrepreneurs in this sector. And we were looking at one of the micro entrepreneurs getting the story of her business and the challenges that she has gone through because of the COVID pandemic. And she had actually, her business had actually fallen to zero because she was a poultry farmer that was majorly doing selling eggs, and it had grown to a level that she could sell 200 trays of eggs per day. And so when the pandemic came in and she was not prepared for any other alternative way of handling her business, she gathered 200 trays of eggs every day until, you know, the entire months of the lockdown, her storage accumulated, and she said she would even plead for people to take them for free, and actually she wouldn't get them. By the time the lockdown was done, all her eggs had gotten rotten. She had loans from her circle. She had loans from the VSLA that she was a member of, and was completely stranded on how she is going to have to pick up the pieces of what is already a shattered business. And of course, she went back to her circle and went back to her VSLA and was asking for refinancing and top up and so on. But that is just one of the so many businesses, what they are experiencing throughout this period. And for us as a sector that looks at this category of people, it was a high time that we actually got to understand the actual problem so that we can be able to design interventions that actually work for this category of people. We plan that as we hear the findings of this study and get your feedback, we expect that you're going to give us feedback that will enrich our strategy in terms of how we intend to lobby for better policies or better initiatives that actually enhance resilience in these among these the VSLA and the micro entrepreneurs. I want to thank Vincent Michael and Tibbs that have spared their time to come and actually give us more feedback on this study as panelists. And we look forward, and Michael, yes, I said Michael, we look forward to hearing from you on your side and your expertise, and we hope that your expertise and the information that you give us will enrich what we need to do to support the sector to get through this difficult time. Thank you so much.
Thank you so much, Ms. Mbabazi, for those opening remarks. Without further ado, I would like to invite Ms. Susan Mucho and Peter Lukemwa to begin the presentation. I'll just ask you to briefly introduce yourselves and to share your slides as well.
Thank you so much, Anthea. And I want to thank both Jackies for their great remarks. Before I begin, my name is Mucho Susan. I work with AMFU. For those that may not be knowing AMFU, it is the Association of Microfinance Institutions of Uganda. So I serve as the Research and Advocacy Officer. So before I begin the presentation, I want to add my voice to our Executive Director's voice to say that we are really grateful to Financial Sector Deepening Uganda for their support as we were doing this research. So as you all heard, the research wasn't done independently by AMFU alone, but we were doing it together with Uganda Matters University. So as I take you through the presentation, I will do the first bit, and then Uganda Matters will also come in. I also want to thank in a special way Uganda Matters for the support and the time that they gave us as we were both doing this research. It was a pleasure working with you. So let me share the slides. So as we look at our research study, our topic of concentration was the effect of COVID-19 on saving groups. Like I've already said, it was compiled by AMFU and Uganda Matters with support from FSD Uganda.
Just checking, Susan, have you successfully shared your slides?
Yes, I have shared the slide.
Okay, I don't think we see them on this side. Let me share from my side.
Okay, let me. Are you able to see it now?
Yes.
All right. Yes, I'm sorry about that. As I was saying, our topic of study was the effect of COVID-19 on saving groups conducted by AMFU and Uganda Matters University. So giving us a background to our study, recent research has credited saving groups for promoting financial inclusion by availing convenient and approximate source of finance when formal options were not available. And these groups also act as social safety nets for communities by providing quick financial credit to low-income earners with low interest rates. And as we may all be aware, that a big percentage of Ugandans are financially excluded. And so according to the FinScope study of 2018, only 11% of adults used services from banks. These saving groups have been established to bridge the gap within these communities. And of course, as most of us or all of us may be aware, that during this pandemic, the government of Uganda implemented lockdowns as the first line of defense for limiting the spread of COVID-19. However, this came at a cost of livelihood for many Ugandans, and saving groups were not excluded. These saving groups still rely on face-to-face transactions, and like many other financial institutions, they require personal meetings to make loans and collect payments. So if you can look at the screen shared, you see a picture of members of a certain VSLA, and it clearly displays the normal way they conduct their meetings. And so because this is the nature that these VSLAs normally gather and then do their payments for those that have loan repayments to make, and then for those that want to do the borrowings, this is how it is normally done. So after one has made a loan repayment, then with evidence of the present members, it is acknowledged and registered in their books of records. But because of the lockdown, such an arrangement was prohibited because members couldn't come together to do their normal usual meetings that they hold. So as we looked at this study, AMFU and Uganda Matters University wanted to find out what the effects of lockdown were on these groups. And so we majorly had 3 objectives of our study. The first objective was to understand the effect of lockdown conditions on the performance of saving group members' businesses, as well as their activities. And the second objective was to analyze the effect of lockdown conditions on access to credit by members of these saving groups and recoveries of the outstanding loans. And the last objective for our study was to understand the kind of help that such groups needed in order to cope with the challenges brought about by the COVID crisis. So as we were conducting our study, we had a particular methodology that we had to follow. And so our concentration was on 2 districts, as we were informed in the beginning. The first district was Lira, and in Lira, we concentrated on Loro sub-county, which had village savings and loan associations that were founded by CARE International. And the second district was in PG, and our concentration was on Nkozi sub-county, which had savings and internal lending communities. But both VSLAs and the SILCs have the same methodology. So the SILCs were founded by Catholic Relief Services. So the reason for selecting Lira and PG districts was because of the fact that these ones had a high concentration on savings groups. And so we felt that the information that would collect from there would, first of all, have enough sample, and then also we wouldn't have biased information because of limited savings groups. So that is the reason as to why we had to go for those 2 districts. And also our study took a cross-sectional and qualitative research design, and the groups studied were purposively selected. So as we were selecting different groups within these regions, we sampled out 25 saving groups from each sub-county. And in each group, we chose out 10 members for the focus group discussions. And the reason was basically for us to get first-hand information from these members that were selected as a reason for supporting the qualitative research study that we did. And also we had 50 group leaders that were interviewed. So that means in total, we had 150 individuals that were interviewed for our study. The focus group discussions and interviews were conducted to collect primary data. This technique was chosen as the best in soliciting personal experiences of saving groups for the members. Maybe I think before I go to this other slide, what I cannot also is the fact that we endeavored to randomly select groups that had existed for 5 years and above, but we also selected a few other groups that were recently established to hear also their experiences in regard to the lockdown conditions and compare the effects for those that have been in existence for some time, and then the new groups that were formed. So under our key findings, we had the major economic activities amongst these groups. So specifically for Nkozi, as we can view on the slide, they had 3 major 3 or 4 activities. The first was the cultivation, and then we had the livestock rearing. We also had the service sector, members that belong to the service sector, and then also those that were formerly employed. So under cultivation, we can see that we had different crops that were grown. I may not have to go through all of them, but we had the groundnuts, the soybeans, cassava, the cabbage, maize, bananas, tomatoes, beans, potatoes, avocados, oranges, passion fruits, and other vegetables. So under livestock, for Nkozi, we had cattle rearing, poultry, and piggery. Then under the service sector, we had members that had grocery shops. We had members that had saloon businesses. There are some who were into bricklaying, carpentry, and restaurant businesses, as well as motorcycle riding. Then, as we engaged these members, we also noticed that there are some who were under formal employment, and those were the teachers and local government workers. Not so much different from Laurel, we still also had we found out that the different economic activities that the groups in Lira were engaged in were also under cultivation, livestock rearing, service sector, and formal employment. So we can clearly see that under cultivation, the crops were not really different from Nkozi. And then livestock, we also had poultry, cattle rearing, and piggery. Under the service sector, I think the one that was unique for Loro compared to Nkozi was the brewing that was different. Otherwise, the rest of the services like the grocery shops, restaurants, carpentry were all the same. When it came to formal employment, members of the groups that we visited under Loro were teachers. I think at this point, I will hand over to you, Anthea, to welcome the next discussant to take us through. Thank you so much for listening to me.
Thank you so much, Susan. Peter, please introduce yourself and go ahead with the presentation.
Thank you, Anthea. I'll begin by asking you to allow me to share the screen and allow me to add in my voice to the previous speakers to appreciate financial sector deepening Uganda for facilitating this workshop. And I also want to extend our gratitude to AMFU for the good collaboration we have had. So I continue from where Susan has stopped. So in our tool, among the questions we had was relating to the effect of the lockdown on business activities. And among the responses was that there was a disruption of food supply chains with the result of prices and the demand dropping. There was also a closure of local markets, and therefore the number of buyers dropped. So the demand for food stuffs dropped. The few traders that remained offered lower prices, and because of the difference in demand, the farmers had a low bargaining position. there was also a failure to access some inputs which affected production, like pesticides and fungicides and other inputs. And we had some qualitative responses that, like, for example, a farmer, a tomato farmer in Nkozi sub-county reported a bit.
Peter, are you fine?
Sorry.
Peter, we can't hear you now. And you've stopped sharing. Should I share on my side?
We can see the screen, Peter.
Sorry for added technical hitch. Can you hear me?
Yes, we can.
Yes. I think the slides were fine.
You can share without screenshot and just use.
Sorry for that. I had a technical glitch. But like as I was saying,
there's a bit of an echo.
The sub-county reported, I had my entire crop destroyed as I could not access loans to purchase pesticides and fungicides, which led to great loss. Another said, I had my crop ready, but I had nowhere to sell it. My entire harvest was therefore destroyed and I lost my entire capital. The other question that we posed related to members' incomes. Most members reported a drop in their incomes as a result of lockdown conditions. A grocery shopkeeper, for example, said, though we continued operating, our incomes were negatively affected since people's purchasing power had gone down. Another said, I had to dispose of some products that got expired from the shop, which affected my capital. The other question, okay, still, the other question related to how members' incomes were affected. And we still have some qualitative answers. A coffee farmer in the same Nkozi sub-county indicated that there was a drop of 40% in the prices of coffee. That is from 5,000 shillings per kilo to 3,000 shillings. An HIV patient from Loro sub-county also submitted I couldn't access medical centers because of the lockdown, and this further affected my health, my productivity, and my income. The other question we asked looked at how saving activities were affected, and the responses indicated that saving activities were affected by the ban on all forms of gatherings. For example, a member from Loro sub-county confessed that the fear of contracting COVID-19 and fear of being arrested by security forces for moving aimlessly constrained us from saving. We kept in our homes, and treasurers could not go around to collect savings. There were, however, groups that continued to save amidst the restrictions and the reduction in incomes. Some groups confessed to have continued to meet even in hiding. Concern about the future emerged as the main driver for continued saving. For example, a member submitted, even with little income, we continue to save because we are concerned that if we do not save, we would have a challenge in the future paying school fees, meeting hospital bills, and other important obligations. However, even in groups that continue to save, members claimed that their ability to save was affected by the reduced returns from their productive activities. We're also interested in understanding how lockdown conditions affected borrowing activities. So all groups indicated that as a result of saving activities dropping, there was also a drop in borrowing activities. So this was largely a result of the suspension of meetings by government, measures undertaken by saving groups to manage credit, the drop in demand for credit because of uncertainty, and drop in productive activities, and the lack of funds for lending. For example, 22 out of 25 groups in Loro sub-county suspended lending altogether. And 3 groups in Loro sub-county credit without interest was available only to those people with large savings and those who had emergencies. In Nkozi sub-county, in 3 groups, lending was suspended because the available money for lending had run out as a result of reduced savings. In 5 groups in Nkozi sub-county, members could not access credit because meetings were suspended. Still in the sub-county, in 3 groups, credit was only available to those with big savings. 2 groups from Nkozi sub-county kept credit available to all members, but demand for this credit still remained low. One of the members said, quote, "Because of the prevailing uncertainty, we were too scared to borrow, as taking a loan was considered too great a risk amidst the prevailing uncertainty." Another member said, "Up until now, we are not confident enough to borrow as our incomes are still unstable. So we're also interested in understanding how lockdown conditions affected outstanding loans, and low recoveries for outstanding loans were reported, being attributed to the drop in members' incomes. Some members were reported to have taken advantage of government's directive to financial institutions to give a grace period to borrowers and not to pay during the time of the crisis. One group in Nkozi sub-county and two groups in Iroro sub-county reported that stringent recovery practices enabled them to recover almost all their outstanding loans. Some groups also reported that a waiver on interest was given for some time as a way of incentivizing their members to pay. And this resulted in improved recovery of outstanding loans. We're also interested in understanding whether members of saving groups employed digital services in the transaction of their business. And none of the groups surveyed employed any digital services in saving or lending activities, though members believed that access to saving services and credit services would have been made easier if they had engaged in digital services. There were, however, concerns regarding the likely transaction costs in engaging in digital services, the low levels of financial and technological literacy among the members, which would have a bearing on their ability to use such services, and the possibility of fraud. So we're also interested in the kind of support members of saving groups would require to enable them to recover from this crisis. And the following were the responses. Financial support to capitalize members' businesses and to recover and to meet post-COVID demand for credit. So this resonated in most of the groups that we interacted with. They claimed they needed support to recapitalize their businesses, support to create some collectively owned businesses which were considered more resilient. In most of the saving groups we interacted with, this was also their opinion. They thought that doing business jointly as a saving group would give them, would enable them to be more resilient and would enable them to make more profits than when they do business individually. Examples of businesses suggested that the groups would do collectively included investment in assets for hire, such as tents, plastic chairs, watering pumps, spray pumps, public address systems, tarpaulins, tractors, storage facilities, oxen, and ox plows. Other businesses suggested included piggery, poultry, bricklaying, dairy farming, goat rearing, beekeeping, crop growing, and bulking. Most farmers also suggested that they need support in the form of agriculture inputs, such as fertilizers, pesticides, fungicides, and herbicides, short maturity seeds, animal drugs, hose, oxen and ox plows, as well as value addition machines. Members also expressed the need for support to meet livelihood needs, including health, taking children back to school, and so on. Other members expressed need to be supported in skills development to enable them, especially those who lost jobs and businesses, to join other trades. Areas of training identified included entrepreneurship, management, and good agricultural practices. Recommendations. It was recommended that saving groups to be able to access external funding to aid their recovery. There was a dramatic reduction in funds available to saving groups for learning purposes at a time when there is increased demand for credit to resuscitate declining businesses and to start new businesses. The decline in available funds is largely a result in the reduction in savings, the main source of funding for the saving groups model, which is also related to the decline and sometimes the collapse of some businesses and loss of employment. Revising the saving groups model to make it open to external funding needs to be explored. Entities supporting saving groups should also consider revising the existing model to introduce digital financial services and to create linkages with microfinance institutions and banks. In the initiatives such as ENIOGA and the parish model, the funding of saving groups need to be considered to address their financial needs. It's again recommended that saving groups still stuck with outstanding loans resulting from the reduction in members' incomes and the disruption of their business activities be supported to have these loans restructured. Entities supporting the saving groups model should consider creating linkages between saving groups and insurance companies to make them more resilient to covariate risks like COVID-19. Promoters of saving groups should consider to explore the revision of the saving groups model to support the concept of collective ownership of businesses. As we saw in the findings, this idea was resonating in most of the groups. They were looking forward to doing business, to establish collective businesses as a way of gaining more resilience and getting more profits. There is also a need to explore upgrading the saving groups model to provide for individuals who outgrow the saving and credit thresholds of the other members. It was clear that some members of the groups had their businesses growing And therefore, their demand for credit was higher, maybe than the other members. And also, their ability to save had become higher, and sometimes going beyond the thresholds set by the individual saving groups. So thank you very much for listening.
Thank you so much, Peter, for that insightful study, for the discussion and the findings and the recommendations. I'm going to now invite our participants our discussants to now provide their insights. I'll just briefly introduce them. Our first discussant is from the Uganda Microfinance Regulatory Authority. He's an expert with over 16 years of microfinance management and banking experience. He has a strong passion for the microfinance sector. He has an MBA in finance and a BA in economics. This is Mr. Orikiriza Tibbs, the manager of microfinance institutions and SACCOs at UMRA. Our other discussant is Michael Katambira, an independent consultant and business entrepreneur in Kampala. He has, for 9 years, since 2006, he has worked as a program manager and training specialist at CRS, which is the Catholic Relief Services, and the savings groups, which is SILK, formed in Nkozi and Sub-County. They were formed under his tenure and his supervision. He's also had a lot of experience working in Uganda and across East and Southern Africa, that is Uganda, Kenya, Tanzania, South Sudan, and Zambia, where he's worked with several financial service providers and organizations. He has an extensive CV, but let me stop there for the interest of time. And then our third discussant is Mr. Vincent Mwijuke, the co-founder and CEO of FutureLink Technologies. He's a business leader, motivational speaker, software developer. And the company that he co-founded, FutureLink Technologies, leverages technologies, and it's a fintech that leverages the relevance and outreach of SACCOs to enhance financial resilience of low and medium income earners in East Africa. He also has 16 years experience in developing sustainable business models and financial technologies. And just want to welcome all our discussants and thank you for being willing to provide your insight into this topic. I'll request that you keep your contribution to 5 minutes each in the interest of time, and to give our attendees opportunity to participate as well. So we'll just start with Mr. Tibbs, and then with Mr. Michael Katambira, and then with Vincent in that order. You're welcome to begin.
Thank you, Chairperson, for this group discussion. I'm Tibbs Orichiriza. I'm the manager, microfinance institutions. I'm in charge of SACCOs at Uganda Microfinance Regulatory Authority.
Sorry, Tibbs, do you mind putting on your video to just help us to follow your discussion? Yeah.
That okay?
Just bend it a bit towards you, the screen. That's better. Thank you.
Oh. So I bring greetings from Uganda Microfinance Regulatory Authority. Uganda Microfinance Regulatory Authority, we have a mandate to license, regulate, and supervise Tier 4 microfinance institutions and money lenders. Microfinance institutions, they include SACCOs, they include non-deposit institutions, they include self-help groups such as VSLs we are discussing. You realize in Tier 4 microfinance institutions, there are also institutions, Tier microfinance institutions that we don't supervise, that we don't regulate. Those are institutions that receive deposits. Those are micro deposit taking institutions. Those are belong to Bank of Uganda. Self-help groups, yes, they are provided for in our Act, the Tier 4 Act 2016. As regulators, we are supposed to provide regulations. We don't license them. There's somebody who was asking me when we are licensing some VSLs. And my response was, we are not going to license them, but we shall supervise them through district community development officers at the districts. So if you are a member of a VSL, we don't expect you to come to UMRA looking for a license to conduct business. Yes, the Act recognizes VSLs, those are self-help groups. And if you are a member, you are in an institution that is able. That's what it would mean. Because the Act provides for registration of self-help groups or VSL, the groups we are discussing. They can, after registering with the community development officer at the district or at a division or at a municipal council, then they can keep updating, submitting some reports. And these reports are not too hard to, like in the report you include how many members in the group, how much savings have you mobilized, how much capital do you have, outstanding credit, portfolio. So it is not a big issue that you have to keep reporting the things you are going to be reporting to a community development officer. It's not too much. SACCOs generally, when you look at the framers of Tier 4 Act, I think they looked at self-help groups. They realized there are too many scattered all over the country, and they couldn't say they are going to be licensed, regulated, and supervised. The work for the authority would be too much. So they provided for self-help groups, but I think behind their mind, they were looking after some time, self-help groups can transform into something else. For instance, they can transform into a circle, because when you are a circle, there are other benefits that come with the circle. For instance, at UMRA, we are working at a circle saving protection fund. That means that at any one point, a member saving with a circle cannot lose all entire savings. So that's some advantage of becoming a circle from a self-help group. So from a circle, you may not even end at a circle. You can even become a bank. You can become a credit institution. You can become an MDI. Yes. Looking at the presentation, I want to thank the members who have done this good work. Members who have attended this discussion, those who have gone to the field and collected all this data, and those who have financed, who have supported the activity. Looking at the key findings, there is a key finding where financial support to recapitalize members' business and to meet post-COVID demand for credit. Yes, I think the presenter was talking about getting external credit, and this is okay, except that for us, we don't want an institution to access too much external credit, because if you if you are a self-help group and you access a bigger percentage of your, let's say, of your assets, of your portfolio is financed by external credit, you reduce cohesion in the group. So would rather advise that you don't go for too much, but it is provided for you can access. And it talks about access to external funding. Again, I think on slide 21, it talked of access to external funding to aid the recovery following the dramatic reduction in funds available to saving groups. Yes, you can access funds, but at least we are saying don't access too much to destroy the cohesion in the group already you have. Then he talked of revising the saving group model to make it open to external funding. Same thing, external funding, because first of all, self-help groups are legal entities if they become registered. If they become registered, it means they can access external funding because you open accounts in a financial institution like banks. You can also go to, for instance, to microfinance support center and access funding from there. So I don't see why you should revise the model to access funding, external funding, because it's already provided for. It's also talked of restructuring loans. Restructuring loans, yes, because of COVID, so many things went wrong. So when you say restructure loans, it's okay. In fact, at UMLA, we gave out guidelines, COVID guidelines, and among the COVID guidelines, we talked of restructuring loans. So I think also self-help groups can restructure loans. Simple, they meet, they discuss together, and they agree on modalities of restructuring their loans. They can increase the terms. I mean, they can increase like if it was 6 months, they can say 8 months, depending on what they agree. You know, they agree in a meeting. And there's, you know, the presenter also talked about entities supporting self-help groups consider revising existing business model to introduce digital financial services. Yes. First of all, if you are a digital, if you are a self-help group generally, then in this COVID era, in this current situation, you need to introduce digital financing so that you can be able to access funds on your phone. You can be able to save your funds on phone. You know, what happens that when you have, like, there is what the presenter talked about excess funds. In a way, he was talking about excess funds. So you should have the way of taking this money to a safer place, because keeping money idle can be expensive itself. So I think that one is also supported. There is a slide where I talk, I think slide 20, some slide where I talk 23. Promoter of saving groups should explore revision of the saving group model, support the concept of collective ownership of business. Really, that should be a way forward. Because if you own a business as a group, like for instance, I've seen some institutions, I think cooperative, where they have cars on Gaya's alone. They have these big commuter buses. Yeah, owning a business together is okay. I think that's okay. And I don't think we need to revise anything. It's a group to sit together and agree this is what we need to do. Then also the president talked about revising group loan scheme to cater for individual loans. Yeah, you know, as a loan, I have an experience of working with group loan schemes. At times, if you are guaranteeing a loan, you reach a point where somebody wants a bigger loan and it is risky for members to guarantee that loan. So they would be advised to get the loan as an individual, so that you remove that responsibility of guarantorship. But also realize this working in a group together, it has some social capital. Social capital, you know, you are this neighbor, you know, that's so and so good. But if like such a self-help group want to give an individual loan, then they have to go for collateral. Maybe, which is not necessary, would rather advise such a member to go to commercial banks and access savings. Because I've already said, these self-help groups should not be expected to remain small, to remain like some people call them informal, but you formalize them. They can register, they can open accounts. So, but we don't expect these self-help groups to remain where they are. They should grow, and members in the group also should grow. If you want to access 100 million in a self-help group that doesn't have 100 million, get where to access the money from.
Mr. Ekes, I'm going to ask you to give one more submission. Then you can...
Okay, thank you. Yes. There is somehow where a presenter talked about a farmer who could not access pesticides. And I think I share that with him because I'm generally a farmer. And I think that's not the whole story. Because for me, what happened, I had identified that my purpose, I am a grower of purpose, by the way, if you want, I can supply. I had identified there was some pests that were attacking my purpose. And later, the lockdown was announced when I had already the pesticides. So I couldn't go there. So this twofold. Somebody saying he couldn't access the market. He couldn't access the shops to buy pesticides. And I'm also saying I couldn't access my garden in towns to spray my garden. So it is twofold. So the way forward is to digitalize. And I think the presenter talked about it. Digitalize and have connections. connections with suppliers, connections with consumers. If you want to have, let's say, for instance, you want to buy a phone, you can buy it online. If you want, you can just make a call, somebody delivers. If you want to sell a product, you can sell, go on the phone, call somebody. If you say, I have this product I'm selling. Digitalization. Let's all agree that where we are going, we need to digitalize our business. We need to do our business not like the way we've been doing before COVID. I think COVID was also a blessing in this case. We are moving forward. We should embrace digitalization. Mr. Chairperson, I thank you very much for this opportunity, for having invited me, and I'm happy to have met all of you here in this group. Thank you very much.
Thank you so much, Mr. Orikiriza. Mr. Michael Katambira, would you please come in as well?
Thank you, FSDU, for the invitation. I also thank AMFU and Uganda Matters University for the work they did on this report and the study. And I also thank the participants of this webinar. To a large extent, I agree to the purpose of this study. Savings groups are naturally supposed to be resilient. Savings groups exist in remote locations, places affected by drought, places affected by war. So we actually expected savings groups to survive also this pandemic. And that shows how bad this pandemic is, because it affected savings groups, yet the savings groups had survived other pandemics and other disasters. So this study is timely because it shows that savings groups now need help. Previously, even in areas that have been affected war, the savings groups were a solution. But now for the pandemic, the savings groups are now a problem. They are the ones now which need assistance. So to a large extent, I agree with the study. It has shown us what we need to do to get the savings groups back. Then I also agree with the findings. It's clear that the businesses were affected. The incomes of the members of the savings groups either reduced or ceased completely. Some groups stopped saving, others saved very small amounts, others collapsed. Borrowing was affected. I expect the default rates are very high. There was no recovery or limited recovery. And all plans to develop, like using digital systems, since we have been in the pandemic for almost 2 years, all plans by the facilitating organizations and all linkages with the banks and other microfinance institutions have not happened. So I agree to the recommendations to rejuvenate these groups, give them some cash handout, so that rather than eat the savings, they can continue the savings, also injecting funds for agricultural inputs so that people can work, get income, and continue saving. I also, to a large extent, agree to the method that was used, a qualitative analysis, which gives us opinions and experiences of the respondents with regard to the effect of the COVID-19. However, I would have loved also to get quantitative information. Savings groups is like a bank at the local level. So when you talk of a bank, you are talking of hard data, financial data that describes the behavior of these groups. So in the pandemic, a lot of things happened to the financial data of the groups. So in addition to the experiences and opinions which the people told us, and now we know there is a problem, we could have gone a step further. For the 50 groups, find out the attendance rates. Of course, they would be having attendance rates before COVID, and then attendance rates after COVID. Then, of course, for groups that completely stopped, the attendance rate would be 0. The savings, we would calculate like the growth rates, the savings growth rates, the loan disbursements, the profitability or the losses, the default rates. So groups have a lot of information that is hard data. So for policymakers and for programming purposes, this hard data is the one that you are going to use to help these groups to bounce back into operation. And this financial information would have added to the experiences that these people have told us, so that if we are programming that we are going to assist the groups in Nkozi and in Oyam, then we would know how much money do we need to inject in capital. Is it for savings? Is it for loans? Where is the real problem in these groups? For example, we would have known how many groups continued saving, how many reduced savings, how many stopped saving. So moving forward, basing on the experiences we have got from this study, a facilitating organization, whether it is FSD or AMFIU, can move a step further to quantify this information so that you have the hard data that you will base on to design the program. I agree on most of the interventions. They are good and they show that these groups really need to be assisted. Currently, other interventions I've heard from the Ministry of Finance, there is some money that is supposed to help small and medium enterprises that were affected by COVID. And definitely, I know the savings groups are not part of those that are going to benefit from this. Possibly it is people like me who is an entrepreneur in Kampala that can maneuver to benefit for the losses I made. But for the savings groups, the facilitating organizations need to look at these interventions critically. The previous speaker from UMRA is saying, maybe we don't need to restructure the model. But I have a different opinion. This model was specifically designed to deal with internal funding. A savings group is supposed to exist on its own. A savings group exists not because people don't know where the banks are, but either the banks are very far, and generally the main reason is that the people do not trust the banks. So what happens is this model has to be restructured and people have to be trained on how to handle external funding. They have no experience in dealing with the external funding. And most of the people in these groups have borrowed before from cooperative societies and from microfinance institutions, and they faced hardships. So they are in savings groups as a relief from external funding, because external funding to them was a disaster. So we need, as programmers, to look at the model. If it is default, we can extend the cycles. If it is meeting procedures, they can integrate in SOPs, social distancing, because this COVID is going to change everything. Even the way the groups were meeting, since COVID is still around, the way the groups were meeting, the way they were handling cash has to change. The standard operating procedures for COVID have to be integrated in. Then
Mr. Katambira, apologies. I'm going to ask you to summarize in one line or two due to the lack of time.
So in summary, the report is good, but I would have loved to see interventions geared at
redesigning the model to accommodate the new normal. Then lastly, I would have also loved to see a comparative analysis. How have savings groups fared as compared to people who are not in savings groups? I think this was also lacking. So that when we are mobilizing new people, the new people who are not in savings groups, we find a way of bringing them in, because they may get scared that it is disadvantageous to be in a savings groups. So we would have loved to learn how have those in savings groups fared as compared to those who are not in savings groups. But this report gives us a good starting point. And I also have misgivings on the digitalization of these savings groups, because it might kill the internal mechanisms for which these savings groups were formed. So when we are digitalizing, we have to take into consideration the transparency and the internal control mechanisms that were established. Once again, thank you very much.
Thank you so much. Mr. Tumujuke, please provide your feedback. Sorry that we have such limited time.
Yes, thank you very much, and really appreciation to FSDU and the team that has gone into the field to bring us this conversation. I think that my points are majorly centering around 4 main areas which have come out in this particular report. And one of them is really the declined incomes. And this is really a measure of financial resilience. For a long time, and indeed as we continue to see, many financial touched the aspects of the consumer's earning. If we are talking about, for example, as indeed well articulated in this report, that most of the people are actually involved in agriculture, but the farmer cannot get market, cannot easily access market for their produce, then everything that we are doing has already gotten a limit. And this report is just really bringing out some of the key underlying challenges that have always been existing, only that, of course, COVID has compounded them. I form an opinion that the true intervention that can actually bring about sustainable transformation must be a linkage between access to affordable credit and access to market for farmers. Unless we are equally concerned about access to markets for farmers, then it is likely that we shall have this conversation going on and repeating ourselves. I feel that really it is time, most especially from the evidence that we have received from this report, and indeed in many other areas as effects of COVID have proven, that there is an urgent need to address access to markets for farmers. And how do we do this? Automate agricultural value chains in a way that fosters transparency in these in these agricultural value chains, expose the urban markets to the farmer so that they are empowered to bargain for their produce and get better price for their produce. Only then will they be able to actually borrow for something that helps them thrive. In my experience, and which possibly has not come out in this report, SLAs are indeed a resilience initiative within the communities. But you and I know that within these groups, the minimum cost of credit is 4% per month in many groups, and that is 48% per year. So you and I know that there is really hardly any business initiative that you can go in borrowing at 48% and have a return that enables you to actually thrive. So you leave now, we are leaving the group members to actually borrow for consumption, and indeed, as has been shown in the report, borrowing for school fees, borrowing for medical bills, basically getting by. But if our intention basically is to help these people in the VSLS thrive, then there is need to address access to market and then access to affordable credit. And that brings me to the second point. It's a good thing that VSLS have come up. They continue to be formed and they have spread. And that is really a wonderful thing, leveraging the Ubuntu spirit of Africans. People know each other. And so they want to continue to help each other, reinforce each other. We as policymakers and people who care for this particular initiative, who care for our people, need to see how to leverage this Ubuntu and mitigate the volatility of the groups to infuse in some stability so that the groups can become more stable, to be trusted with affordable credit. And by doing this, I propose that this be really something to consciously. I know that it is working. If you look at POWESA, for example, we are working with POWESA in Uganda. You can clearly see that if you are bringing groups in a particular region and galvanizing them and bringing them together in a circle that gives a local appeal, a circle that gives an appearance of the local community, then in a way you galvanize these groups to articulate their financial need. And so a circle is in a better position to actually bargain with the bank, to bargain with the development agency, agricultural bank, agencies that are supporting agriculture, the ABIs, because they are more stable. So you have the group still remaining with it's a bit of flexibility, but the circle, brings in that bit of stability, and you are able now to have these groups being able to access affordable credit. Lastly, we come back to the measure of financial services, and I would like to come back to automation. Indeed, automation, as it has been recommended in the report, automation not really in the sense of supplying technologies, but these technologies being deployed with reasonable business models that incentivize everybody that is part of the ecosystem, has potential to actually spark the transformation that we are actually talking about. In our experience, we, because we work with these VSLS through the different institutions, the circles and the MFIs that we work with. And this is some of the data that we have. 12 months ago, we rolled out a digital financial literacy program where we've been training these people directly through the phone and everything. And we have evidence.
Sorry, Vincent. I'm just going to give you about 30 seconds to summarize.
Oh, beautiful. I just wanted to say that really the digital financial literacy coming together with technologies are in a way able to actually enhance financial resilience. And as already shown, we have seen that for the last 12 months, we see the cash flow per capita for the people that have been able to receive this digital financial literacy has grown by 13%, and the savings have grown by 8.7%. So I do confirm that is an appropriate strategy. Thank you.
Thank you so much. And I appreciate everyone staying on for a little longer. I just want to take 5 more minutes. I see Mr. Richard Ndianabo from Ministry of Finance would like to say something. Can I give you just a minute or so to speak, please?
Yes, Anthea, thank you very much. I want to join the others in thanking AMFU, FSDO, and the Uganda Matters University for this report. It is timely, and it will help us in understanding more the impact of COVID to these savings groups. My colleague Orikiza from UMRA has already given the side, but I wanted to give some comments on, sorry, let me increase volume. Thank you. I want to give comments on the financial support. I see members are mentioning that this finance support will come from government. No, the report, if I read it very well, it does not point out that any kind of support to the groups will come from government. It's open. That means can be from the private sector, it can be from non-government organizations, it can be from the banking fraternity, and of course, government can also come in. But I wanted to mention that government has already recognized this. We have received some funding from IFAD, and right now, Profila is implementing some support in northern Uganda, where some of these groups have been affected by the COVID, and this is manifested in this group. And so we will be providing a grant to these groups of 5 million Uganda shillings. The fortunate thing or the condition is that this grant can be used by the group to lend out, but it can never be shared out at the end of the season. So this has already started, and we call upon those other agencies and banks who can ably support this initiative to do so. At the same time, I would love I see the report talks about the lack of digital finance services in these groups. Clearly, this should not have been the case, because we know some of these banks have been connecting savings groups, NGOs have been connecting savings groups to banks, and have been providing with point of sale machines to be linked to financial institutions. And in that way, we expected that the report might find out that some groups were able to remit, for example, collect resources and remit to the accounts accounts which are located within financial institutions. But I see the report is silent. It therefore means we need to do a lot in supporting groups to get access to financial institutions digitally and provide them with training to use these things. The report says there is illiteracy. Yes, we need training. Then we also need to provide these facilities like point of sale machines. I know the time is not enough, but I also see that the report does not indicate some of the proposals in which we can bring back those that have moved out of these groups, those that have run out. What do we do? What can we do? The report is very silent about that. We thought you would have recognized the need for us to bring back on board, and then to know how we can support the groups to recover through more extra training. I know the time is not enough, but thank you for inviting us to participate.
Thank you so much, Mr. Ndianabo. I appreciate that. I'm just going to ask Peter if you can give some closing remarks in 1 minute or so. I know there have been lots of questions and that they'll contribute to finalizing the report. We thank you all for your contributions. Peter, if you could just respond or summarize in 1 minute.
Thank you, Anthea. Maybe there was a question on the validity and reliability of this study, how it was handled. And to answer this, we piloted the instrument. Before we began the actual study, we did the piloting, and we went on improving on this instrument, basing on the revelations of the pilot studies. I just want to, there's the recommendation of Michael Katambira of having a more quantitative study. And I think this study which we have done, which is qualitative, lays now a basis, lays a basis for a more quantitative study, which may be broader and having a wider scope. At least it raises some some ideas that can form a basis for a more quantitative study. Maybe lastly, from the comment of Richard Ndianabo, I think there's maybe what we need to add. I think it's a recommendation we shall add with regard to those members who have left saving groups. So we shall add a recommendation to that regard. Maybe other members of my team may have something more to say.
Susan, do you want to add something in 30 seconds?
Thank you so much, Anthea and everyone. To the questions, I will go straight away to Robert of EBO. He asked a question on what strategies can we employ to make such disintegrated groups. It didn't seem to be complete, but I think he wanted to mean such disintegrated groups helped or assisted. And the strategy that I could think of quickly is that we could create linkages, because these groups collect money and it remains in their boxes traditionally. Yet if we linked them to other financial institutions, they could access more financial services. And I also felt I should add a bit on the question of Rachel Mandra about validity. And as far as I know, validity would mean whether the tool is giving the right information for the purpose it was intended for. And I could say that our information was valid in a sense that we used focus group discussions. Questionnaires were also open-ended, which gave members an opportunity to express themselves. And then she asked about thematic analysis, whether it was done. And I can say that we used our research questions centering on the subjective experiences of participants, and the aim was to assess experiences, the views and opinions of these members. And lastly, about reliability, we used our information is reliable because it was a pilot study that we did, like Peter said, but we interviewed groups within different districts, and the results that came from these different groups showed that it had similar ways in which the groups operate, and also the interventions that they raised were similar. So that proved that the information they gave was reliable, much as it was a pilot study and it wasn't done over a period of time. Because of time, I think, Anthea, that's what I can talk about for now.
Thank you so much. I'm just going to ask Jackie to come in and to close off the event for us.
Thank you very much, Anthea. Thank you so much for moderating this great discussion. I just want to thank our presenters today from AMFU and from UMU. Thank you so much for doing this work and sharing such great insights with us. I just want to thank the discussants, Mr. Rikiriza, Vincent, and Michael. Thank you for those very important insights that you have shared. Richard, thank you so much for joining us as well. We have taken all comments. There were so many comments and questions on the chat, and thank you so much for keeping this engaging. Unfortunately, we've run out of time. We also thank you for bearing with us and sticking to it, even though we are almost 15 minutes late. But we shall take all your comments and incorporate in the report. I've seen some concerns around the districts that we carried out. I mean, the small sample of just two districts. We note this and we knew that was happening, but like we said, this was a pilot study. This helps us to refine. We will refine the instrument, but also look at other areas going forward. So this is a pilot study, like we are saying, we are building institutional capacity within AMFU, and also seeing how these partnerships between practitioners and academia can work. So this is for us a learning journey as well. But we truly appreciate all the comments, and thank you very much. I don't know if Jackie is still online, if she wants to say something, or back to you, Anthea. Not sure if Jack, oh yeah, Jackie is still online.
Jack is in a brief meeting. Yeah, so she may not be able to speak at the moment.
Okay,
that's okay. Yeah, I think we've taken enough of your time. Richard, to answer your question about the next steps, we'll be refining the report. And once it's concluded, we're going to share we'll share the information on FSDU sites as well as on AMFU, and we'll also share it with our partners like yourself. So thank you, everyone. I want to wish you a good afternoon and stay blessed.
Thank you.
Thank you. Bye-bye.
Bye.
Thank you. Bye.